Well, hello, fellow investors and traders. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves just the one question, and that is, what happened today? What does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. If you want to be notified of anytime content is pushed, just reach up in the right hand corner there on YouTube, subscribe. Anytime we do that, you'll get a notification. As far as what happened in these markets today, we had weakness over in Europe. DAX down another 200, the CAC's down 76, 1.5–2% across the board. You had Asia down pretty much across the board as well. China was the only one that bucked the trend. And outside of that, oil, gold, all the commodities hit one more time. Dollar up, but not that much. Equity markets, they started down. They were down off the European mess. They slowly started to turn it around. They ended up about 0.75% on the NDX, and that was with Apple down a decent percentage most of the day. And then elsewhere, up to about 0.5% gain. As far as what does this all say to us? Unfortunately, I came on here thinking I was going to give you a green light. And it turns out I can't. And the reason I can't has to do with the way these markets performed today. Let's look at it together here, and I'll show you what I'm looking at. On the surface, it looked really good, right? You get the hammer reversal, you get up underneath it, you flip back around, you're going to go back and do the immediate bearish retest regen off this swing point. Now when you come back into it immediately, you're usually going to try to get to the other side. That's the push. That's what it's going to try and do. But unfortunately, it left more volume. And it left more volume here on the S&P 500. When you see more volume on a chart, that says it can go right back down there and test it again. In other words, come test these lows again. It doesn't have to do it the next day, but usually it's going to come back down there and do it. And you look at it on the NASDAQ, hammer reversal, same setup. And in this case, it actually didn't break a swing point low, but has more volume. If you look at the NDX also goes down and tests the lows, pushes more volume. And the Russell actually stayed down, was unable to get back over, did test into this big bar, and the Russell actually had more volume as well. So in all the indexes, we end up with more volume on the test. Yes, we got reversals. Yes, we got some hammers on all but one, but you had more volume, and that's not exactly what you would like to see. Certainly not what you'd like to see if you're looking for green lights. When we come back here, I'm going to tackle what did go right today, and then evaluate whether there's enough bad or if there's too much good to think that we're going to get a big bounce from here. I'll be right back.
Do you have retirement funds you want to keep invested, yet you constantly worry about a potential market crash? As LA says, you shouldn't worry about a crash until it's time. Through LA's extensive research, he has identified the key characteristics that are necessary for a market crash. In the 2008 crash, for example, our investors actually made money and avoided huge losses through LA's investment advice. Because the markets usually go up, our retirement service keeps you invested when risk is low and reduces your exposure when risks become elevated. There are 3 portfolios you can follow: aggressive, balanced, and conservative. It's a simple process at a reasonable cost that requires very little of your time. To learn more, go to our homepage, hover over Retirement Service, and click Get Started.
So as we come back here from the break, if you haven't checked out this retirement service, as we were just seeing there in the video, this service, very cheap rate. If you have a 401k, if you have an IRA, and you're trying to decide should you be in the market, should you not be in the market, this portfolio service essentially gives you that idea tells you, based on conservative, aggressive models, what your portfolio mix ought to look like at any given time, and is based on the neoclassical principles on a long-term time frame. This rate's only good until the end of the year, so if you're interested in managing your portfolio in a safer, effective way, check it out. It's a guaranteed rate for 5 years, $75. You can't beat that. And that will go away at the end of this year, and we'll start pushing the price up there where it really ought to be. As far as what did go right today, let's turn our attention to that. If you remember, we've been watching Germany, and the reason for it is Germany had that ABCD structure to the downside. Well, Germany finishes it off today, makes the run, right, finishes off the ABCD structure, comes right back into that bottom of that bar that we were targeting, that we thought it would get to. And as it gets there, it does less volume, right? Does less volume than it did on that bar. You're going to get a bounce out of here. And so if you're looking for what went right, this worked out perfectly as it should. Now, if Germany's really going to turn, it's going to turn because the euro turns, not because Germany turns. And so with the Fed coming up, the real question is, what are the currencies doing and what are they likely to do into the Fed? And if we pull up the FXE so we can get a feel for what the European index, currency index is doing, you had volume up here at about 837. You do it at 367. You go over, you go back under, so you're testing that top. You can't hold over it. And if you bring the weekly over, right, it's up here still testing on that bearish retest regen. This is the week where it either tells us that, in fact, we're going to consolidate and move in this larger range, or we're going to head back down. And so what I'm saying is that, is it going to be consolidation with this whole range as the consolidation area, or is this thing going to do a larger ABCD structure to the downside? That's the test this week. The way we'll know, of course, is what happens off the Fed and what happens with respect to Friday's close in the euro. Does it get back underneath here immediately? If so, I like to see at least a couple bars, one to get over it, one to stay over it, to tell me that it's real. And so you got the one over it, you got to stay over it now to tell me that more than likely the trend has changed from this to this, and we don't know that until we get another bar. So that's a big scenario. The German index looking as if it's bottomed. The FXE on a daily going over back under suggests that this dollar is going to come back in. If the dollar is going to come back in, that's kind of an interesting, the dollar is going to work back higher. That's kind of an interesting segue into the Fed. Of course, with the Fed, everybody expecting that they're probably going to raise those rates, or at least that has been what they've been telling us. Then we'd see weakness in these other currencies and the dollar getting strong again. If we look at the FXY, same thing, goes over back under, has a little bit less volume. If we move over and look at the dollar, the dollar goes up under, tests again, and then flips back around and holds. And so all the currencies are looking as if they're telling us that same story, and that is that the Fed is going to raise these rates. If the Fed raises the rates, if the dollar goes higher, then you're going to see bonds probably come down. Bonds started to fall today, so that also falls into the same camp. You're going to see pressure on commodities. Oil did get under back over, but in the GCC, if we look at the continuous commodity index, that one trades lower again overall. So the story looks, at least from the OX markets, looks pretty much the same, and that is that those characteristics that we were looking for have fallen into place. Appears to me that the Fed is going to raise the rates and that we're going to see the dollar strengthen. And we may see, as a result of that, we may see a rise tomorrow in these indexes, and then a test back down, right, to test this area where the volume was left. So if you push higher tomorrow and then immediately, right? The Fed comes out and does their thing on Wednesday. We could immediately see that test back into this area to test this high volume, and we'll see if it holds or not. So I think if you're looking for the green light, you're looking in the wrong place. It looks to me like you're going to get a bounce tomorrow. How far it goes is a different question. Whether it sticks is yet another question. And with the Fed looming and with this high volume low out there and with it doing a hammer reversal today, I suspect that this thing's not quite done on the downside. Certainly going to come back here at some point, and I could see a scenario where it happens on Wednesday. Tomorrow, probably a bounce though. I'll catch you next time. Thanks for joining me. Please tell a friend, tell two. I'm LA. This is your daily NeoTA wrap. Have a great night. I'll see you tomorrow. Actually, tomorrow I will not be doing a show. I'm traveling. I'll have to catch you on Wednesday after the Fed has their a giddy up with everybody. I'll see you then. Bye.